A lot of people delay buying term insurance for one simple reason. They feel they have time. They think they'll buy it later, maybe after promotion, maybe after a salary jump, maybe after they settle up a few expenses, or maybe after asking their wife. But every year you delay buying a term plan, the premium becomes more and more expensive. Now, you know that. 3 prominent insurers are raising their premiums in 20 days from today. Now, I'm not here to convince you to buy a term plan, that's up to you. But I have something interesting to share. Now, what if I told you that there's a way to lock in your premiums early, plus finish paying for your term insurance much earlier than the policy duration itself, and by doing that, you pay less, much less, in fact, almost 30 to 50% lesser premiums overall. Now, this is called limited pay. Hello folks, I'm Shashank, you're watching Ditto Insurance. At Ditto, we help you compare health and term insurance plans with honest advice from IDI certified advisors. There'll be no spam, no forceful selling, and if at any point you want help comparing plans or understanding what works best for your situation, you can book a free call using the link in the description. Look, when you buy a term insurance plan, the insurer usually gives you multiple options to pay your premiums. The most common option is something called as regular pay, where you keep paying premiums every single year until the policy ends. So if your coverage lasts till age 60 and you buy the policy at age 30, you will pay premiums for the entire 30-year period. But there's another option that they also suggest that's called limited pay. Now, under limited pay, your coverage can still last for the full duration, but your premium payments stop much earlier. For example, you might buy coverage till age 60 but choose to pay the premiums only for 10, 15 or 20 years. Now, once those payments are complete, the policy continues without any further premiums. Now, in fact, one of my colleagues at Ditto chose a 5 pay for his 3 crore cover and he paid off his last premium just a couple of days ago. But he's covered till 65. Similarly, your life cover remains active for the entire policy term even though you finished paying early. Now, at first glance, limited pay might look more expensive because the annual premium is higher compared to regular pay. But the important part is the total money you pay over the entire policy. Now, on your screen, you will see a comparison for a 25-year-old non-smoking male buying a 1 crore term insurance cover from Axis Max Life Smart Term Plan Plus. Now, this is without the first year discount, by the way. The policy term is 40 years, which means coverage lasts till age 65. Now, look at how the premium changes depending on the payment structure. If you choose a 5 pay, the annual premium is about 41k, but you only pay for 5 years. That means the total premium outflow is just around 2.09 lakh rupees. If you stretch that to 10 pay, the yearly premium drops to 21k paid for 10 years, taking the outflow to roughly 2.19 lakhs. Now, under the 15 pay, the premium becomes 17,000 per year for 15 years and the total comes to about 2.58 lakh. Now, compare that with the longer payment structures. If you choose something like pay till retirement, which is roughly 35 years, the annual premium does drop to 10,000 rupees, but your total premium paid increases to about 3.6 lakh rupees. And under regular pay for the full 40-year term, the yearly premium becomes 9,900, but because you're paying for the entire duration, the total premium outflow reaches around 3.94 lakh rupees. That's almost 4 lakh rupees. So what do we see here? As the premium payment period becomes shorter, the annual premium increases, but the total premium paid across the policy often becomes lower than regular pay. Now, this is why many people look at limited pay almost like locking in their insurance early and finishing payment sooner rather than stretching them across 4 decades. Folks, limited pay has some major advantages. One is financial freedom later in life. Now, most expenses follow a predictable pattern. Your 30s and early 40s are usually the highest earning years, but once you approach your 50s, priorities start changing, right? You may want to reduce financial obligations or plan for retirement or shift to lower risk financial commitments. Now, if you're still paying insurance premiums at that stage, it becomes another fixed expense and you might not want that. Limited pay solves that problem. You complete the premium payments early and remove that liability from your future financial planning. Now, another benefit is certainty. When you buy a term plan early and choose limited pay, you lock in premiums while you're young and healthy. Now, if you delay buying a term plan altogether, 2 things might happen. First, premiums increase with age. Second, new health conditions may appear which can either increase premiums further or make it harder to get a coverage even. So, buying early and completing payments early removes both of those risks. Now, let's address an important question. If limited pay is so beneficial, why doesn't everyone choose it? The answer is simple: cash flow. Because the premium payment period is shorter, the annual premium is higher, so while the total cost may be lower over the life of the policy, the yearly payment is heavier. Some people prefer regular pay because the annual premium is lower and easier to manage. Others prefer limited pay because they want to finish paying earlier. So the decision depends on your financial situation at the end of the day. See, limited pay makes sense if you have a stable income and want to finish insurance payments early. Maybe if you have some cash lying around from your business, maybe this is a decision decision that you might take. It can also work well for professionals who expect strong income growth in their early years and want to reduce liabilities later. Now, on the other hand, regular pay may be suitable if you prefer spreading the cost over a longer period to keep annual premiums lower, and that's okay as well. But regardless of which payment structure you choose, one thing is extremely clear: the earlier you buy a term insurance, the better. Premiums are lower, underwriting is easier, and you get protection during the years when your family depends on your income the most. Alright folks, that's it from me. If you'd like a free consultation with our IDEA certified advisors, then head to the link in the description and book your free call with us. I'll see you in the next one. Until then, happy insurance hunting.